Hello guys, welcome in today's session to Concept, and today we'll be learning about something very important that you have to keep in your mind while you are doing investment, right? But before that, if you are new to the video, you can go in the description, there is link. You can download and install the software. After successful registration, you will get some tools here, okay, that can you use for your investment, right? Now also there in the learn section, you will get some videos in the video library, okay, so you can see these videos that will help you out, okay. Now also these videos are also available in multiple languages like Hindi, English, Marathi and Tamil, so you can choose your preference. And at any point of time, if you're getting any doubts, so you can go in the profile section, and in the support we have our contact number and email ID also, so you can contact us and we will be there to help you out, right? So moving towards to today's session. So today we will be learning about the physiology and the strategies that you have to keep in your mind while you are doing investment. Okay, let's start. Okay, so guys, first of all, if I'll tell you like what is the philosophy of investment. So philosophy is a broadened term, okay, that also includes your strategies, okay, your goals while you are doing the investment, right? So for example, if I'll tell you about the physiology, okay, physiology. Now physiology is basically your aim, okay, why are you doing the investment? Okay, why are you doing the investment? So maybe it is for the future, like for the after 10 or 20 years, you are planning for the marriage of your child, right? You are planning to buy a car after 10 years, so that is why you are investing. So basically it is a aim, okay, aim of your investment, right? The philosophy, right? Now for example, let's take a real life scenario. For example, right now I'm building my physiology that I have to speak only truth. I'll avoid saying lie. So for that, what the measures I will take, okay, what are the things that I'll keep in my mind, what are the things that I have to work upon, that is my strategies, right? So the path that we are taking, for our aim, that is our strategies, right? And that is our strategies. Okay, there are multiple number of strategies. There can be so many strategies. It depends upon yourself. Okay, so there is a term that is know yourself. Okay, know yourself, like KYC, there is a term called KYS, know yourself. So these strategies can depend on your age. Okay, so these strategies can depend on your age, your time horizon. Okay, so for example, we will take time. Okay, then the dependent, okay, and then your risk profile. Okay, then your risk profile. So strategies can vary according to these terms, right? According to these terms, we will explain all these terms. Okay, let's go ahead. First of all, we'll talk about the physiology. Okay, so basically when we are trading in the market, there are two types of physiology. Okay, the first one is the active, okay, and the second one is passive. Sorry, when we are not trading, but when we are investing in the market, right? Okay, so one is active and second one is passive. Now in the active investment, what suppose there is a person X, okay, if he thinks that he will not get much profit in some particular stocks, and for example, this is a index Nifty, right? Nifty. Now he's already having a perception that Nifty's overall growth in a year is approximately 38%, right? Approximately 38%. Okay, now he's thinking that either if he'll choose any stock, that stock will not give him more profit than this Nifty index. So that is why he is not he will not do the efforts of finding some good stock. He will not do some research. He will not make some strategies. So what he'll do, he will just go with the index mutual funds. Okay, index mutual funds. He'll just put his money in the investment of this index mutual funds, right? So he is not making any strategies, he is not doing any research. So that is the person who has the active physiology, right? Now the second term is passive physiology. Now the person who is doing investment with the passive physiology, what he'll do, he'll go to the market. Okay, he'll go to the market, he'll research the market, he'll make his strategies, he will he will get to know about the various risk profile, like in which risk profile he is standing. Okay, so that is the research he has to do. So the passive the person who has the passive physiology, he will research the market. He will research the market and he will select the best stock, the best equity or the best mutual fund that will basically grow his mutual fund. Okay, so that his investment can grow further, right? So these are the two things that you have to keep in your mind while you're doing you are having the term physiology, right? Now let's go to the strategy. What do you mean by the strategies? Okay, so strategy. Now see, if you are, as I have told you before, when you are making strategies in investment, either you are an active trader. Okay, so in active trader, you don't have to make any strategies when you have active physiology. But when you have a passive physiology, then you tends to make strategies, okay, that are suitable to you. Okay, so there are certain criterias. For example, age, as I have told you, right? Now, what if I am 25 years old, okay, and there is a person who is 60-year-old and he is already retired, right? So it means right now I have a active income. Okay, so I have a active income. It means I can risk more while I'm investing, right? If there is a person who is already 60 plus and he who is dependent on his pension, right? So he will take less risk, okay, because he is not having any active source of income right now. Okay, that is the second thing. When we are talking about age, so I still have so much age left. Okay, so I am making my future plans. Okay, so that is why this is important. The age is very important, right? The person who is already 60, so he must be making some short-term plan, right? First one. The second one is time horizon. As I have already explained you, for example, I'm making some plans of 10, 20, okay, 30 years later, okay, some future terms plan, okay, so that it will also be included while you are making strategies. Either you are making strategies for shorter time frame, okay, either you want to do something in less than 1 year, so for that you have to make other strategies. You can then choose, you can go with different kinds of mutual funds, right? And if you are going for the longer time frame, then you can choose the growth mutual funds also, right, who has the faster rate of growth, right? The third one is the risk profile. Okay, the risk profile. A person who has a good income, okay, and he think he can invest 3/4 part of his income, or half part, or 1/4 part of his income. Okay, so for example, if a person is investing 1/4 part of his income, right, and there is a person who is investing 1/3 part of his income, okay, so it means this person is taking more risk. And if someone is taking more risk, so he will make a good profit also, because when there is a high risk involved, that is when a person make high profit, right? So high profit comes with high risk. Okay, so that is one of the factors. Okay, and obvious income is one of the major factor that is included, so we are not talking about it. So, okay, so these are some 3 major important factors when you are making strategies, right? Now what are the strategies that you can imply in the when you are making investment in the mutual funds, right? So there are basically 3 types of strategies, so we will talk about it. The first one is value investing. First one is value investing. Okay, now when you are doing the value investment, so what we do in this type of investment, basically we choose those type of stocks whose intrinsic value is less than the market price, right? So for example, the market price is 100, but you see a stock whose intrinsic value is 98. It means this stock is under evaluated, so you will buy this stock because you think this stock can move in the bullish direction, or it has a scope for growth, right? So that is the value investment, right? Now the second thing is that dividend investment. Okay, the second thing, dividend investment. Now in dividend investment, what you prefer, you go with those type of stocks which provides you good investment, right? Either you have back tested the data of that particular stock, or you have seen like this stock gives good dividend, or you can go with evergreen stocks also. So that is known as the dividend investment. So that will provide you a pocket of money at very regular time of interval. For example, if you are having profit in a particular stock, so the profit will be given to you in the same year or next year, you can say. Okay, so that is the dividend investment. Now the third type of investment is the conservative investment, right? The conservative investment. Now in the conservative investment, for a person, he thinks that he is investing rupees 100 and he doesn't care if the 100 will become 101 or 102, but he don't want any loss. He don't want 100 rupees to get 98 or 97. Okay, so if after 1 year or 2 year, if this 100 will remain 100 or above than 100, okay, so that is the person's aim. Okay, so that is what the conservative investment, when a person is very fearful and he don't want to take any risk in the market, so that is conservative. So in the conservative, the growth is slow. Okay, the growth is slow, but at the similar time the risk is also slow, right? So these are various terms that is related with the strategies, various strategies that you can imply while you are making your investment in the mutual funds, right? So this is all about physiology, how you can make your physiology, how you can build your physiology if you are going to take if you are going to do the investment. Also there are multiple strategies that I have shown you, so you can go either with them, right? Also in the Quantcept Wealth application, you will get multiple tools that will help you to find best stock for you, so you can try it once. Okay, so in the link I have already shared the in the description I have already shared the link. Okay, so you can download and install it. Thank you so much guys. This was Ankit Singh Rawat, your trainer, and have a good day.